Yo, what's up going on YouTube? How you doing? I just got through with a long night of gaming and I am also very exhausted. But unlike last night where I was looking forward to an update that was coming out for a game that I so very much love to play, um, I am now not waiting for any update. There's one, but it won't be for another 2 years. So, with that being said, I am now without distraction. Hi, welcome to Word Plus. Here we delve into the realm of what can I learn, and if I'm learning it, then guess what? I'm going to journal about it, and the journal is me recording and then posting to Org Plus. So if you are new here or on the comeback, like any of the content you see for whatever reason, be sure to drop a like on that video that you saw, and be sure to subscribe. So in the event we come up with something that, or I come up with something that you might like to see, subscribe so you know when I post that oh so very special something. And if it's something that you don't see me ever having to learn, comment down below in the comment section of this video, of every video you see, in the event you see any of the videos I have, what you would like me to learn about and give my honest opinion on, as well as master, because I'm honestly thinking just broad spectrum, something small. This is neat. I didn't know this before. That's good to know. I could name it the Good to Know series. But yeah, last video we pieced together our entire strategy. We learned what breaker blocks were. We learned what liquidity sweeps were. Again, we learned what order blocks were. We learned how to identify them within the market. We have our times set up, we have our notes set up, we have our strategy set up, and honestly, I think we did good the last time we were here. I think we were good. So, clearly you can see, this is the 1 minute chart. We were working off of this right here, right? And as you can see, on the 1 minute, we were working off of this right here, right? It wasn't until about 10:41, so 10 minutes after 10:30, right? Our designated stop looking for a trade, right? Our designated one, that essentially, we did not take a trade here. Why? Because it did not cross into this fair value gap. It did not make this an inverse fair value gap. And that was our final confirmation to enter a trade on. It didn't make the inverse fair value gap until after 10:30. We want to take a trade in between 9:50 and 10:30. That is our goal. I understood my mistake when I made it last time, and essentially it was, as I said it was a second ago. We found where we wanted to take a trade from our confluences. We knew the general trend on the hourly, and as a result, when we went to execute, it was not to our standard. I'm going to remove all drawings. Remove 24. Boom. Boom. Remove 11. So we have a nice, fresh chart to look at. Now, with that being the case, we're going to go down to 30-minute right quick so we can mark out sessions. Vertical line, we need boom. Need 4. Boom. And 8. Boom. Here's our sessions. Asian, London, New York. We do the same thing here. Boom. Boom. Session 4. 8. Good. This is a thing. This is a thing. Let's go ahead and zoom out a bit right here. Boom. Boom. Yay. So off the hourly, we're going to mark our key levels. Asian session got up to here. Boom. Asian session got to there. Actually, the lowest point was right here on Asian session. So boom, we'll mark that. We had our lowest point here on London session. They tanked on that. That's wild. We have not seen our highest point. I'm not going to mark it because we have yet to see a higher point here. We're going to go on NASDAQ, do the same thing. Boom. Asian session, our most recent high is right there. Up, down, high. Boom. Yay. Lowest point was right here. Down, up, low. I'm not seeing anything within this or this that suggests lower. We're good. That being said, I'm going to take this. Lowest point here. And this matches the S&P 500. With the exception of... Oh, wait. We're on the 30-minute. That one. This is the hourly. Boom, 30-minute. This and that match. One day before, yep. One day before, yep. Cool. We have 2 green candles going up. Boom. 2 green candles going up. Boom. Yay. So, what are we doing right now? We just marked out key levels. We're not too concerned about this key level anymore. Why? Because it's cleared it. This is the most recent high. This is the most recent low per the sessions. So I'm expecting this right here it'll stay within this price range. We're on the S&P now. Same gist. Price crossed. We don't care about this. Boom. Before we get any further, because we have, guess what, news to check. Chat. Without further ado, let's go ahead and display this window and actually get it going. First display window. This. This works. This. Woo! There's a lot on that, chat. I'm not seeing anything for... Yeah, I'm not seeing anything for any of the news we ought to avoid. I'll show it to chat as well. You can actually see it right now. Not this one. Boom. You can actually see it right there, right? We have not... I'm looking at USD down here, right? I'm not seeing any PPI. I'm not seeing what are our no-goes. CPI, PPI, FOMC, NFP. I'm not seeing any of this. None of that. 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 Is that good? Yes. That means price should stay within, minimize OBS, this price range. We should not see it bounce all over the place. If it does go up or below, it'll quickly rebound and we will have our stuff. We have our key levels here. Assuming price does not come back up and clear this, making it an inverse fair value gap, right? We have our fair value gap here. We don't build building blocks on the, what's it called? We mark liquidity, sessions highs and lows, and from that point on, we scale down to the 5-minute time frame. And this is supposed to happen just before market open. I'm getting super early with it, so I'm not missing out on the best trade I could possibly have. Just not doing it. I don't care. It ain't worth it to miss out. Up, down, most recent high, boom. I'm marking these out, so I have down, up, most recent low. Boom, a place to look at. We did not sweep that liquidity. That is still lower than this one. For the sake of knowing, we're going to mark this low way over here. Boom. What are we in? We are currently in an uptrend. Why? We have made a most recent high. Check it out. We are within trend. We did not sweep this. I think it's going to continue going up for New York session. So what am I looking for? Just so we're on the same page, we're looking for a buy position. What is our buy position? Like, how do we determine a buy position? We're looking for specifically a liquidity sweep on the lows to predict a reversal up high. From that liquidity sweep, we can determine price going higher, right? That is our goal. From there, let's go ahead and do this right here. We'll do the same thing on NASDAQ. Up, down, most recent high. Boom, yay, this. Most recent low from over here. I'm going to say down, up, this right here, just because. I'll mark it. I will mark it just because. We seem to have a bit of S&T divergence. What candle is this? 14. 14. It seems we have some S&T divergence happening because we got close, and this actually swept the liquidity on this, which means the S&P 500 is lagging behind the NASDAQ right now per London session. Seeing as this is the case, I think what is going to happen is because we've already got the sweep over here, price is already going to take a hike much, much higher. I'm expecting within this price range, higher. I'm expecting to go up. Same gist here. We know price is going to continue up because of the S&T divergence, and this confluence is being used correctly, if I'm not mistaken. S&T. Wait for time minute frame. It says scale down to 5-minute time frame and wait for the confirmation, be it a break of structure, inverse fair value gap, or S&T. And inverse fair value gap is legit what this is right here, except we have an inverse fair value gap as a result of this liquidity sweep. So from this move, we can pretty much assume that we are going to have a much higher rate. Just is going to barrel on up. Order block, breaker block, yeah. I think this is the most recent. Like, this is a prime example of this right here being a liquidity sweep off of this. And from there, we have our order block here, right? And our breaker block are these two green candles, right? Market makers manipulated their sell orders downloaded for their buy orders, and as a result, it pushed higher. We didn't get a fair value gap because there was a lack of sell orders in the market. As a result, because of this imbalance, we had a complete clear of the order block. It filled the order. The market makers filled the order block from that. So we have that moving higher. We created a new high there. Man, is this boring. Uh-oh. Didn't mean to do that. Oops. What am I going to do, chat? I think what I'm going to do is I'm going to leave this completely open. Why? Because I think I am okay for right now. I know news is not going to impact me in any way today specifically. I'm looking for a buy, up, right? Up move. With that being said, I do believe that I can pause my recording now, and I'm going to come back. Pre-market is 8 o'clock. This right here is pre-market. We're looking for a trade between 9:50 and 10:30. That is per the notes. 9:50, 10:30. So we're waiting for the 8 o'clock pre-market, and from there we will map out exactly what we need to do and watch our 9:50 a.m. mark. In fact, let's go ahead and mark that right quick. Our 9:50, so we're not getting lost. Here's 9:30. This right here is officially New York Stock Exchange open, right? Like 20 minutes before it. We're going to come back when it's in between these, right? And from there, we will map out exactly what we need to. So when we get to this line here, we will have exactly what we need. At the moment, I'm going to call this a liquidity sweep because it is lagging behind the NASDAQ, and we did sweep this low right here, right? As a result, we know price is going to go higher. What's our next mode of just with this? After identifying and waiting for price to hit a key level, it seems to have, off of this right here, we haven't actually hit a key level. So that is the first thing we're waiting on. We're waiting for the key level, be it a low or a high. Once that's a thing, We wait for either break of structure, inverse for value gap, or SMT. Right now, it's looking more like, because we have not closed below that. Actually. So, high, low, high, low, high, low, high, low. They close below. It did. So we have a break of structure. Right? From that break of structure, we got our liquidity sweep as well as a fair value gap. This is a sign of inverse, and we got confirmation on the same candle. We also got a fair value gap, which is confirmation and continuation. It's going to continue moving down. We are looking for a breaker block, I believe. If we wanted to take a trade off of this, we would, I think, move down to the 10-minute, and we would wait for a 1-minute confirmation of break of structure, which means it will, from this move, continue moving down, right? So move lower than this, and from there, we will take a trade. I think my idea was just flip though, because we were in an uptrend and we had a break of structure that is liquidity sweep, right? And on break of structure on the same one, and we moved down. So, yeah. I'm going to pause the recording now, and that's what I'm going to do. I'm going to come back to this later. Like, as this right here opens up, or mark that 9:30. Boom. There's a lot that I just picked up on. I'm learning. I'm getting this right. We are nowhere near pre-market open, and I have corrected my alarms, my times to look for entry, as well as when my alarm should go off on pre-market. Pre-market for New York session is 8 in the morning, my time. So we were looking for a trade at 9:50. Actually, I think this is wrong. I'm gonna go down this, boom, this, boom, just so we're on the same page. Pre-market is 8:30 Eastern Standard Time. But we're looking for a trade is 9:50. That is the same for both of these. So 8:30, 9:50. This is our go line. Going back up to the hour, just to mark out some interesting stuff that's happening on the hourly, because they are important. We have our key levels. Asian session high, London session low. Neither has been crossed. So we're waiting on, guess what? One of our key levels to get hit. When are we waiting for them to get hit? Somewhere in this. Before 9:50. Or at 9:50. Doesn't matter. So long as the key level gets hit on the 1 hour, which is part of our gist, boom, right? Once the price level gets hit, we scale down to 5 minutes, look for break of structure, inverse for value gap, SMT divergence. However, we're working off of confluence. I'm looking at the confluences I have on the high time frame just to see what price wants to do before we start delving down deeper into the lower time frames, looking for a trade that might not be valid. So we had a 1 hour fair value gap here that was turned inverse here, right? We swept liquidity off of this low here, right? As a result of a liquidity sweep, we have, guess what? Sign of reversal. So at this point in time, we just got to pre-market. It is now 8:10. Pre-market is open. We're waiting for this to come back to us. We're not going to look for a trade, though, until this. Per this chart, though, and per this chart being the same, right? There is no SMT divergence between this low and this low here. What I'm looking at is a sign of reversal, because we had an inverse for value gap, and inverse for value gap is the sign of continuation. No, it's confirming that the inverse for value gap is confirming that there is going to be that liquidity sweep. I am gonna look at this strategy again. I'm gonna like watch the strategy over here. Going off of what I know though, the inverse fair value gap makes this fair value gap no longer valid, and so price sweeps this. We're looking at now an liquidity sweep on the high time frame. Liquidity sweep is a sign of reversal, which means price is going to continue moving higher, right? Because we looked at our lows, not our highs. If we have a liquidity sweep on the low, that's reversal to go higher. What are we looking for without scaling down? What are we looking for exactly on the high time frame to confirm that price is in fact going to go higher? We're either looking for a break of structure, an inverse fair value gap, or an S&T divergence. So, per the high time frame, that is what we'll be looking for, right? And this is after we get, I'm gonna say 2 more candles in, right? Either we break structure, right, with a large candle moving up, closing out 1, 2 fair value gaps, or we don't and have a well, we've already got the inverse fair value gap off of the liquidity sweep. It's our confirmation and our key level at the same time. As a result of that being a thing, it is confirmed that price is going to be moving higher based off of this. That is my guess. That is my idea. And as a result of that idea being that the inverse fair value gap is confirmed to be going higher, we are in an uptrend. We have yet to break structure to the downside. So as a result of that, I think price is going to move higher per New York session. When this becomes a thing and market is available to go, right? Oh, look, we might actually have a break of structure off of this candle here. We might. If this low closes higher than this low, that'll be our break of structure back to the upside. That will be our confirmation as well. Boom. As a result of that closing higher than this low, though, we'll have confirmation that price is going to move higher throughout the New York pre-market gist, right? From there, we will look further into our 5-minute time frame because we haven't had price hit key level yet. So what does that mean? I think price per this mode of confluence, right? Price needs to hit either over down here or up here. Once it crosses one of these lines, we will scale down into the 5-minute time frame. Again, we're looking for a trade before 10:30. Allow me to get down into the 5-minute because for some reason it does not want me marking stuff on 10. It won't let me view 10 minutes. So there's our 10:30 mark. And just so we got a nice firm landing pad, we're gonna put this right here. 5-minute. $10:30. Boom. If we cannot find a trade between these two right here, or maybe I'm gonna give 15 minutes of benefit of the doubt, 15 minutes. If we can't find a trade by 11:45, I'm not gonna take a trade. This video is gonna get posted, and my confluence, my idea will have been validated. Let's go back up to the 1 hour on the NASDAQ. Back English is failing me right now. Maybe. I hope you guys are having such a wonderful day. I really do. In the event you guys are missing out or just don't really know what the heck I'm doing on this channel or any other channel, this channel is primarily meant for me to learn stuff, right? And I have many other channels. One's for gaming, one's for not so pleasant stuff that I will not mention here. If you're interested in any of those channels, I strongly advise you check out the description of this video here. This video will have links to all 3 of those channels, including this one over there. There will also be a link to my Twitch. Twitch streams Mondays, Wednesdays, and Fridays. Late night. Very, very late night. If you're interested in that, the content I stream, right? I strongly recommend checking out Twitch. In the event you don't like the quality on Twitch for whatever reason and you think YouTube is better, or you're just a diehard YouTube fan, I strongly recommend going to the channel description on Twitch and pressing the one link to YouTube channel. That will redirect you to Orbs Vault. Orbs Vault is where I host all the VODs. That is every single stream in 1080p, 60 frames a second, so you're getting the best quality video. That is a direct copy and paste from stream. There's like one video where I didn't do half of my stream and it kind of sucked, and it's the only one like it. So if you're interested in any of that kind of content, go check out those links. I know it's a bit of a maze to get to Orbs Vault, but you'll get there. I have faith. Yeah, I'm going to pause recording again because we are not at trade time yet. The ball has yet to hit the game. And as a result, I am going to wait. I'm going to pause recording. I'm going to rewind this. I'm going to rewatch a little bit. If you're interested in this guy's content as well, strongly advise checking out his channel. That link can be found in the description, as well as the link to the video I'm watching in reference to doing this. With that being said, we'll be right back. So just to confirm what I just picked up from him, we are still waiting for price to hit key level. Regardless of what happens over here, price has to hit key level first. This is just how it is. Earlier I said, because this is an inverse for value gap now, and it's a sign of continuation that price is going to continue moving higher. Before it can move higher, it's got to move lower. How much lower? We're hoping to hit this key point here on London's low, right? When it hits this, we're looking for, on the 5-minute, our confirmation that, one, it did in fact hit the low, and it's going to, on the 5-minute, break structure to the upside, so it'll retest the low on the 5-minute, and as a result, we're waiting for a new low to be, or a higher low to be formed. Because at this point, this will be the most recent low, right? We're waiting on the break of structure, which is a higher low, or an inverse fair value gap, so this will have created a fair value gap, right? And as a result, we're waiting for a retrace up, which we could get an inverse fair value gap and a break of structure off of at the same time. Once it breaks structure, we move on to 5-minute continuation confluences. We wait for a fair value gap, break block, order block, equilibrium, right? From there, we wait for 1-minute confirmation. That is a break of structure or inverse fair value gap to the downside now. From there, we enter a short position to continue moving down. Per this right here, though, I think the price is going to move higher, so I'm looking for a long position. Specifically speaking, when we're looking for a long position, we're not looking for signs of reversal except for on the low side. So essentially, it'll sweep this liquidity and push higher. That's what we're waiting on. And that would make a lot of sense with hitting key level first. It makes sense for it to hit the key level down low, sweeping the liquidity, and then from there, waiting for the break of structure, making a new high, right? And pushing higher. Because per this candle right here, right, this order block, which is also a break of structure, we have, in fact, a downtrend. We made a lower high. However, this is the only break of structure, right? So, right now, we're waiting for a lower low. That will be, yeah, it'll just close below this low. That's all we're waiting on.